All right, can you hear me now? One second, I want to make sure this audio is good, everybody. Can you hear me? You can't hear anything? Okay, they can hear me. All right, good. I see people in the chat saying they can hear me. I can't see myself right now. That's funny. 0 to 1 million. All right, let me make sure my head is actually inside this thing because I can't see my chat right now, and I keep pressing the wrong button. Thank you everybody for joining. Whoever came and checking me out. All right, you can see my head, so that's good. All right, I should have looked at how to look at my screen and the PowerPoint at the same time. But anyway, I'll look at the chat through here. All right, so let's start. Obviously, trading is very risky. 97.5% of traders lose money, a lot of money in the market. And to look at my screen and the PowerPoint. This is my reality every day that I wake up in the morning to, Monday through Friday. I quit my job about a month ago. And so I just day trade for a living now. So when I get up in the morning, this is not necessarily what I'm thinking about, but this is, again, it's my reality that I have to be the 2.5% every morning. Again, I'm not offering any financial advice. I have to say that because whenever you sign up for an account, you have to sign up that you are not a financial advisor, so on and so forth. I'm sharing my personal experience and knowledge. A bunch of people have always asked me questions about day trading. And I mean, I answer them as much as I can. I just couldn't give everybody a one-on-one time. So I'm just going to go into a little bit of what I know, just like a very small bit of what I know. My goal here is not to give you the best tip so you can make $10,000 tomorrow, $20,000 in a month, or anything like that. Again, it's not financial advice. I'm really just giving you the knowledge that I have so that whenever you engage in a conversation about the stock market, you know what somebody's talking about. That you can look at a chart and you can read a chart, and that you have the information that you equipped yourself, rather than giving you a setup like, hey, this is how I trade, this is my strategy. I will get into my strategy in some later videos and talk about some stuff like that, but let me dip this down a little bit. For right now, I'm just gonna go over a few beginner things, and then I'm gonna get into the candlesticks today so everybody can read a candlestick chart. We'll talk about the difference between a regular chart and the candlestick chart, and then we'll go from there. And I will be, if you have any questions in the chat, I will be answering questions. I'll look over every now and again to see if I have any questions in the chat. All right, so terms to know. We're going to go over a few things. Everybody usually asks, how much money do I need to begin day trading? And let me let you know, I day trade stocks. I do a few options contracts. I don't do any futures just because I just don't do futures. I don't do Forex right now. I've traded Forex before. It's really slow for me. It's just reasons I don't do Forex. I don't mind doing Forex. Forex is not a scam. There are scammers who have groups that try to get you to pay to be a part of the group. But Forex is not a scam. It's a very large, lucrative market. But for me, I trade stocks, and that's it. No ETFs, nothing crazy like that. Just stocks. All right. So I usually tell people that you need $2,000 to start if you're going to be doing what I'm doing. Do you need $2,000 if you're going to log on to Robinhood or you're going to log on to Webull? No, you can do it $200. You can buy fractional shares, which is not buying a whole share. You can buy 25% of a share. Like if you don't have enough money to buy, I think Teslas are probably around $821. If you don't have an account large enough to buy a whole share, you can buy half a share. And when it moves, you get half of the profits or half of the points. But I say $2,000 for a reason, because you need leverage. which is one of the things on here. There's a difference between having a cash account and a margin account, and those are really affected by the number one thing you need to know about day trading if you're going to get into it is the PDT, the pattern day rule. There is a rule that is put into place some time ago to protect people from losing their money if you do not have $25,000 in your account, or if you don't, you have to have the 25,000 cash. But if you had $25,000 in there previously and you bought some stocks, and the stocks you spent $10,000 to buy stocks, and you have $15,000 in your account, and the stocks are still worth $10,000, you can trade every day as many times as you want, back and forth. When you go below that amount, you can no longer trade. You're restricted to 3 day trades in a 5-day period, and I'll get more into that. That's the most restrictive rule, and it's 25K is the number that every trader is trying to hit to free themselves up to really trade. Until you're at that point, you're stuck with the 3 trades going in and out. You can swing trade from day to day. We'll talk more about swing trading when we get into the slides. We'll talk more about brokers. But the PDT rule is a rule you need to know, because if you violate it, your account will get flagged. I mean, you'll be severely limited. And then we'll talk a little bit about margin accounts and cash accounts. Teach us how to get money. All right, so the PDT rule, we're going to talk about this. So let's just say I have an account. Before we get into accounts, let's just say I'm going to explain it as best as I can. All right, this is just a regular schedule, a regular week. I'm sorry, I was looking at the chat, and this is me entering a position. So on Monday, let's just say I buy Apple, 100 shares of Apple. I buy 100 shares on Monday, and then before the stock market closes on Monday, I sell 100. All right, that's considered one round trip. All right, I get 3 in 5 days. All right, that's one round trip. On Tuesday, I do not trade. On Wednesday, I do the same thing. I buy 100 shares of Apple. I sell 100 shares of Apple. All right, and Thursday, I do the same thing. Buy 100 shares, sell 100 shares. All right, I have made 3 round trips. All right, let me get my mouse right here. I cannot trade on Friday. If I trade on Friday, I'm going to get flagged. All right, because I have made 1 round trip on Monday, 1 round trip on Wednesday, and another round trip on Thursday. All right, and this is why it's so hard to make money, a lot of money, with a small account doing what I do. If your account's below 25K, you're gonna have to have big winners, and you're gonna have to look for good setups to make money, at least make enough money to live off of. Like, I cannot be limited by, if I had to only make 3 trades a week, I would have not quit my job. I just can't do it. Now, let's go to another example. All right, so this is another example. It's a little more complicated because a round trip has to occur within a day. So this example, right, I bought Apple on Monday, sold Apple on Monday. All right, 100 shares, 100 shares. So that's 1 round trip. All right, on Tuesday, no trades. Wednesday, I buy Apple at 100 shares. All right, but I don't sell until Thursday morning. All right, so I bought on Wednesday and I sold on Thursday. All right, and then I buy and I sell again on Thursday. All right, this is not considered a round trip because I bought it on Wednesday and I sold it again on Thursday. All right, which allows me to buy on Thursday and sell again on Thursday. All right, so this is considered a round trip. This buy and this sell right here. All right, so I've completed 1 round trip, 2 round trips, and I don't know why I have sell again. That's not appropriate. I don't know why I have that on the PowerPoint, but that's not supposed to be there. This is just to demonstrate this is not a round trip. So now after this, if I could delete that, I would, but I'm on the PowerPoint, so I won't. I could on Friday buy and sell again, even though I bought and sold, and this I think is supposed to be a buy and sell. All right, so that would be 4 trades. The reason I don't do that is because I don't hold positions overnight. Not normally. I have held some larger positions overnight on Tesla at the split, and then woken up really green. But I anticipated being really green. If I'm buying and holding overnight, it's because I really anticipate that the stock is going to move overnight. I just don't feel comfortable leaving a lot of money in the stock market and waking up and I mean, it's good when you wake up and you're several hundred or several thousand up. Is a very emotional day to wake up and look at your account and you're red. And red $50, red $100, $200. That's fine. You wake up and your account's red $2,000-$3,000. That's the day you already know you're starting the day in the hole. So I don't do that. All right, last thing. So this is and I'm gonna get more into this. This is something called scaling. I'm gonna get more into this whenever we get into some other things. Again, here I bought Apple on Monday, buy 100, sell 100, one round trip. All right. Here's something else you can do on Wednesday. All right. I buy 500 shares and then I sell 250 shares. All right. And then I sell 200 shares. All right. This is called scaling out of a position. So if I bought 500 shares at $100, right, and it goes up to $150, all right. So I want to capture that $50 growth. All right, I sell 250 shares. I may do this because I think it's still going to go up. All right, let's say it does go up. It does go up to $175 a share. I sell the remaining 200, or it's 250 left, but I sell 200 more shares at $175. All right, and then it can come back down to, let's say, 140 or something like that, and then I sell my last remaining shares. This is considered one round trip because I open my position here. And I'm going to get into some of this lingo that I'm using. I opened my position here at 500 shares and I sold all of it right here. So even though it's 3 different sales, it's considered one round trip. And again, I'm doing the same thing over here. Now, this is something called shorting. If you look at it, I'm selling before I'm buying. This is called shorting. All right. We'll get into shorting a little bit later. I'm selling 300 shares first, and this is just to give you an example. We'll come back to this. I'm selling 300 shares first. So that's how I open my position. All right. And then I buy back 200. I scale out. I buy back another 100 by scaling out. And this may sound weird because I'm talking about buying after selling, but it's fine. And then I sell the rest. Or I don't know why. I think I messed up some slide because that's not supposed to have a sell. That closes that position. But this is one trip, 2 trips, and this is not a trip at all because I opened the position on one day and I closed it on another day. All right. If you have any questions, please ask. All right. That's the Pdt rule. This is really restrictive to a trader, especially in the beginning. All right. We're going to talk about accounts. Now, a margin account, any account that you open with any broker, more than likely it's going to be a margin account. It just means you can execute trades with your entire account value. You don't have to wait for your cash to settle. It basically means this. If I have a $5,000 account or a $500 account, $5,000 account, right? All right. I buy 5,000 shares of Sprite at $1 a piece, right? I buy 5,000 shares. I sell it at $2 a share, right? I bought it at $1 a share. I sell it at $2 a share, right? So I made 100% growth. I'm now at $10,000 in my account because I bought and sold. All right. Now, technically, the money has not settled, but with a margin account, I will be allowed to go and buy and sell more. So it's almost like the broker is lending you the money that you have in your account. They don't do that in a cash account. We'll get into the reason you may use a cash account. It's just a settlement period that you don't have to wait for in a margin account. You can day trade with all your money that's in your account, even after you just bought and sold. A cash account is a little bit different. You can only execute trades with cash available. So again, if I have a $5,000 account, right, and I take, let's say, same thing, Sprite's trading at $1. God for it, that'd be great. Sprite's trading at $1. And I only buy 2,500 shares. Okay, I buy 2,500 shares and I sell them at $2. Right. So now my account right? It's worth $7,500. But I cannot trade with $7,500. I can't even trade with the initial $5,000. I am limited to the rest of the cash that is in my account. I should have an example up here for that. So what happens is with a cash account, you have to wait for your cash to settle. And this is what these T1, T2, and T3. Depending on the account, I think Stock Trade has a T0. I think that's the only company I know that has a Stock Trade because it's peer-to-peer. This is how long it takes, how many days it takes your cash to settle. So after a day, right, after I made that trade, that cash that I made and the cash that I used to enter that position are now available to trade with. All right. The reason why you use a cash account is because with a cash account, you are not restricted by the PDT. With a cash account, you can trade as many times as you want to. The problem is that you're limited to the amount of cash that you have in your cash account. So it's really restrictive again in terms of growing your account, because if you're under $25,000 in your account, you're not going to take that many profitable trades in a week to grow your account quickly, because you're going to need buying power to buy enough shares or something. You're not going to grow your account very quickly buying 1 to 200, 2 to 300. I mean, you can depending on the movement of the stock. There have been some times just recently I bought 800 shares of something. All right, moved $3 or $4. 800 shares, $3 or $4. You do the math. So it's possible, but again, I was using something called leverage. And we'll get into that to enter into my position. It's just very hard with a cash account to grow your account, even though you're evading the PDT rule. But that's what that's for. All right, leverage down here is 2 to 1. All right, when you enter or you buy an account, you'll get 2 to 1, you'll get 4 to 1, and some accounts give you 6 to 1. This is when brokers lend you money, so you can buy a security. A security is a stock or some financial instrument. All right. For example, the example is very clear. You have an account for $3,000. You get 4 to 1 leverage on that $3,000 account. That means you have the buying power of $12,000. That means if I have $3,000 in my account, but I have the buying power of $12,000, and there's a stock that's trading for $10,000. I'm sorry, for $10 a share, I can buy 1,000 shares of it. All right, because my buying power will allow me, even though I only have $3,000 in the account, they're giving me 4 to 1 leverage, and they're allowing me to buy up to $12,000 worth in securities. Now, you can't usually have to have a certain, and it depends on the stock sometimes. You usually have to have a certain amount of the actual cash in your account against your leverage. So you can't, like, if it's very rare that you can use all $12,000 of the buying power. You're usually going to be able to use up to 11.5, but you're not going to be able to use it all. At $2,000, this is why I recommend the $2,000. At $2,000, almost every broker that I know of is going to give you 2 to 1. So you'll have $2,000 in your account, but you'll have $4,000 to trade with. And this is why it'll be easier to grow your account, because with $4,000 to trade with, or if you're going with $8,000 to trade with, allows you to buy bigger positions. It allows you to, instead of buying 2,000 shares or something, I can buy 4,000 shares or something. If it goes up 50 cents or a whole dollar, I make more money. On the back end of that, though, this is why some people don't choose to have these accounts on the back, a margin account, is because on the back end of that is I can lose more money because I'm buying a bigger position. All right. So as great as this is, having 2 to 1, 4 to 1, usually you get the 4 to 1 once you hit $25K. Once you hit $25,000 and you start trading actively in your account, they'll flag or identify your account as a pattern day trader. You won't get flagged negatively because you have 25K in the account. All right. But what they'll do is you'll come in, you'll see your account. When you first hit 25K, it'll say 25K or $25,000 account value, buying power. It'll say 50K. All right. It'll say that for a couple days. After that, you'll look at your account. It'll say 25K account value, $100,000 buying power. All right. This allows you to make a lot more money. It also allows you to lose a lot more money. Offshore accounts sometimes offer 6 to 1, which is incredible. Um, Offshore accounts also don't have a Pdt rule. We'll get more into that. So if you have an account and you do have a small account, like $500, right? You can get $3,000 worth of buying power out of an offshore account. 6-to-1 leverage is the most. I think I've heard of 20-to-1 with a big trader I know. I'm not doing 20-to-1 because I'm not taking positions where I need millions of dollars worth of buying power. Maybe with something like, the only thing I can think about that I would actively trade with and need $1 million position is like Tesla. I'm trying to think what else trades very, very, very high. I'm not a large cap trader, and I usually don't trade stuff actively. Day trade stuff that's that expensive. I think $300-$400 is the most I'm gonna buy, because again, I can't buy that many shares of it. Even at $400, I mean, you can look into getting to $2,000 positions, 3,000 share positions, and you're talking about $1.2 million. So but I don't need 21. I'm good on 21. All right, so these are the brokers. A broker is just people who will provide you account. You have E-Trade, TD Ameritrade. I have an account with them. Charles Schwab, Robinhood. I used to have an account with Robinhood. Robinhood is good for entry. Robinhood is really, really user friendly. Really like the interface for options. I don't trade options that much anymore. I do love options trading though. Interactive Brokers is another one, and Capital Markets Elite Group is another broker I have an account with. It's an offshore broker. It does allow me to I use Capital Markets because it allows me to short stocks. TD Ameritrade never has anything to borrow, and I'll explain that in a second. So I can't short with them whenever I want to go short. So I have Capital Markets Elite Group. They give me 6-to-1. So I put a little bit of money in there, and it allows me to day trade shorts. And then it has hotkeys. It has some other things that make it accessible to me. And these are platforms. Now, the reason I don't use Robinhood, and the reason I think Webull is kind of the same, use it on your phone. I'm not saying that these aren't great platforms, and that you can't make money with them. You can make money with Robinhood. You can make money with Webull. I made money with Robinhood. But you can't do what I do, or you can't really actively day trade with these, because one, the feel is terrible. And by feel, I mean, whenever you try to execute an order, it's really slow, and you really, hopefully this thing's works on here so I can show you how fast prices move. I need to be in and out positions really, really quickly to get my profit off the table, or to not lose. Is the difference between losing maybe $200-$300 and losing $1,500. You can make money on Robinhood, but it just doesn't. It doesn't offer enough. In terms of, I'll show you some of my platforms, at least Thinkorswim today. I'll show you some Thinkorswim today and show you what I mean by enough. But they're great if you want to start out with and you want to put a little money in them. I would suggest it. It's fine. All right, DAS is one, DAS Trader. I used to have DAS. It has hotkey functions. Hotkeys just means if I press Control A or Control, I'll go through my actual hotkeys. So Control 1 on my I have Sterling Trader Pro. On Sterling Trader Pro, Control 1 will buy, if I'm on level 2, it will buy 1,000 shares automatically, like right then and there. And if I press Control, it's a minus, Control minus, it'll sell half of my position. If I can press Control plus, it'll sell my whole position, or all my shares. That's what the position. The position is just how many shares you have, or your active trade. All right. So I need to be in and out. So I don't have time to type in a certain amount and then wait till it goes. I don't have all that time. I need to be in and out my position. So Control 1, Control 2, it goes all the way up to 0. Or 0's 10,000 shares. All right. If I need to buy 20,000 shares or something, which I'm not going to do because my risk tolerance isn't that high. I just press Control 0 twice. I'm in the position. All right, I'm back out. All right, these are offered by DAS. Is offered by you can probably get it with the interactive brokers. The brokers just hold your money, and let's talk about that, because people have asked me about, well, how can I get, or how do when I put my money in my account and I buy something, can I get it back out? When you put your money in their brokerage, right, it is literally just an account extended away from your account. Is an account that you own, right? So if I have money in my Thinkorswim, now my offshore account is a little hard. It takes a little longer to get money from because it's offshore. All right. But my Thinkorswim or I'm sorry, TD Ameritrade, I can. It's Sunday. All right. Tomorrow's a holiday. I can go to my account. All right. Select withdraw $1,000. It'll be in my personal checking account, and probably Wednesday or Thursday. All right, so you have direct access to this money. It's not tied up to anything. It's not out of grabs. You don't have to go through loops or anything. As long as it's not, you can't buy 100 shares of Tesla or 100 shares. I could use Tesla a lot. 100 shares of Microsoft, right? And it goes up, and you don't sell it, and then try to pull money out. You can't, because your money's tied up in the trade. You can't do that. Once you close your position, all right, and the money's yours, you can take the money out. So you have access to that. Now, these different brokers offer different platforms. CMEG is Capital Markets Lead Group. They have Sterling Trader Pro. They have Dash. TradeStation is offered by Interactive Brokers. Thinkorswim is only exclusive to TD Ameritrade. And there are other platforms I don't really use. There's one for Forex. I can't really remember because I don't trade Forex. And there are probably other platforms out there, but these platforms are just instruments that allow you to trade. And I'll show you what I mean. Like I can trade. If you sign up for TD Ameritrade, you can go to their website and you can enter into a position from there, and you can get out of a position from there. You just can't do it quickly. And again, you can't do enough. And we'll talk about the enough. It's easier to show you than to tell you about it. All right. These are terms to know. I'm not going to go over all of these because, well, I'll go over all of them pretty quickly. But this is like basic lingo that anybody who's talking about stocks knows well, and that if you're going to be listening to or you're interested in stocks, you need to know what somebody's talking about whenever they're talking about these things. Again, my object is not. Though I will get into my strategy and how I trade, and then maybe in the future I'll get into showing some trades that I trade throughout the day. But my objective here is to give you the knowledge so that you know for yourself. It's not to. Again, it's 97.5% of day traders lose money. That means like most people lose money doing this, right? I'm just trying. I'm not saying you're going to know this and you're going to be a great trader. I'm saying you will know this and you will be more knowledgeable about this. All right. That's what I'm saying. All right. So we're talking about bullish. You've heard of bulls. You heard of bearish. You probably heard these terms and maybe not know what they're talking about. All right. Bullish just means it's green. All right. Green means good. Green means going up. If the market is bullish, they mean the market is going up. If they say the market is bearish, they mean it's going down. Price action. I will say this a lot. Price action is just the movement of the stock. So if I say the price action was crazy and it was jumping all over the place, that means it just means that it was going $34, $36, $39, $21. It was bouncing all over the place. All right. Position. We talked about positions, description of your active trades. All right. You can enter a long and a short position. We'll talk about that in a second. You can scale in and scale out, scaling into a position. All right. So, one strategy I use is to buy the first candle to make a new high. All right. I may buy the first candle to make a new high, but I may not go in as much as I want to go in. So I may go in 1,000 shares, 2,000 shares, first candle to make a new high. All right. And then see what it does. All right. And then I have a short, we'll talk about stop too. I don't think I'll have stop on here, but I'll talk about stop right now. Right. No, I have it on here. Entry, exit. We'll talk about it when I get there. But, I may buy 2,000 shares, and then as it goes up, I may buy more shares as it goes up. And then I may sell shares as it's going up. So this is why you have to have hotkeys. All right. Control 2. It goes up 10 cents, 10, 15 cents. All right. I want to sell half my position. I want to go ahead and take some profit off the table. So I sell half. Control minus, right? I can sell half. I don't have to sit there and type in half the number of stocks that I own and then click a button. I don't have time for that, because in the time that it takes to type that, it could fall. All right. So control minus, sell half my position. All right. It goes up a little bit more. I can go ahead and sell half again, and I'll sell half of the position I have. And then let's just say it looks like it's petering out, or looks like it won't continue up. I can sell my whole position right there and get out of it. That's scaling in. All right. Scaling out is just the opposite. All right. I'm getting out of a position. I'm unwinding my position. I scale out of a position. All right. And so what I'm doing is, I buy my position, right? I may hold a position. I may scale in, right? So I buy 2,000 shares, right? It's at $1. I buy 2,000 shares. All right, it goes to $1.15. All right, add another 2,000 shares. All right, $1.25. Add another 2,000 shares. I'm at 6,000 shares. All right, it's at $1.50. I probably wouldn't, but I may add another 2,000 shares right here at 8,000. Right, so I've scaled into my position. All right, so now it's going up. So now I'm scaling out, and this is basically what I just said before. I'm scaling out my position as it's going up. I'm selling out. Sell half, sell half, sell half, sell half until finally I sell my whole position. So scaling in is when you're buying into your position, but you're buying as it goes up and you're just incrementally buying. You're doing starter sizes. All right. You're doing this on set. Usually you do this on a setup. This is not for breakout trades. Breakout trades, sometimes you go in full force and then you just scalp. Buy high, sell higher. You hope to buy high and sell higher. Shorting. All right, so we need to talk about going long and going short. All right, so going long just means I buy a stock and then I sell a stock. All right, I buy it at $1 and I hope to sell it at $2. I buy it at $1, hope to sell it at $1.50. All right, there's a movie out there called The Big Short. I actually encourage everybody to see this movie. It's a great movie, and it'll tell you about what happened in 2008 with the market boom. But shorting a stock is when you sell a stock. All right, you can make money both ways in the market. The market's going up, you can make money. The market's coming down, you can make money. Stock's going up, you can make money. Stock is going down, you can make money. And hopefully I can load this chart maybe today and I can show you exactly when I did that. If a stock's going down and you anticipate it going down, all right, you do something called shorting. Shorting, if your broker has shares to borrow, all right, and you'll know this because on my Sterling Pro, it's so easy to borrow. Your broker has to have shares to borrow, otherwise you have to locate them. It's something called you can call sometimes TD Ameritrade. You can do other things with different brokers, and you can locate them, but it's usually a fee. So it's better to do it when it's easier to borrow, because then you don't have to pay the fee on top of the commission to borrow it if you're paying commissions. Sorry. All right. So you borrow. Hopefully I explain. And if anybody has any questions, just type. You borrow the stock. Okay. So what you're doing is, let's just say, I should have typed up an example for this. I'm sorry. All right. So I'm looking at Google, right? Google's trading at $100, but Google's had some bad news, right? So I'm anticipating Google to drop, right? So I don't own any shares of Google because I'm not going long, I'm going short. I'm not buying it with anticipating it going higher. I'm going to borrow shares, right, from my broker. If their broker has them to borrow, all right, I'm going to borrow them and sell them to the market. So this would look like instead of buying first, you would sell first. So you would sell 100 shares to the market, or however many shares, 1 share, 2 shares, it doesn't matter. You would sell the shares to the market, all right? Then what would happen is, as it goes down, you would buy those shares back, all right? And what would happen is, just like whenever you go long, if it goes from $1 to $1.50, all right, you bought it at $1, you sold it at $1.50, you get 50 cents on every dollar. All right, it's the same thing in reverse. All right, if it was at $1 or at $100 in this example, but it goes down to $50, I get $50 if it's $100 when I sell it, and then $50 when I buy it back. I get $50 per every share I sold and bought back. It can be kind of confusing. Shorting a stock is again, it's one of those things where I want you to be educated on it and know what somebody's talking about, or know what it is to short a stock, more so than I want you to go actively and do it. Shorting can be quite lucrative. The danger, there's a danger with shorting that's not with going long. If I go long, if I buy 1,000 shares or something, right, and it costs me $5,000 to buy it, the most I can lose is $5,000, because if the stock goes from however much it's worth to zero, right, I paid $5,000 and it's essentially worthless now. So with shorting is a little bit different. If I short a stock and I'm wrong, there is no limit to how high the stock can go. All right. And this is kind of what happened with Tesla, which is why Tesla's got so high. People kept shorting, and there's something called a short squeeze. This is another thing you can kind of buy into. What happens is if or I'll explain kind of what happened. So Tesla, before the 5-to-1 split, and probably after the 5-to-1 split, there were people who were kind of bearish on Tesla, and they thought Tesla, wasn't going to sustain. I think on last April, it hit $500 for the first time, had $100 billion cap for the first time. And so people were shorting it. So they were saying, there's no way Tesla is overvalued, is going to go down. So I'm going to short it. I'm going to anticipate it going down. Right. So I'm going to go and borrow these shares from my broker with anticipating that it goes down. Tons of people did this. All right. The problem is it never went down. It went up. All right. So these people who are shorted it are in these positions, and they're going red and red and red and red. All right. So what happens is they eventually have to cover their positions, because if you don't and it keeps going red, one, if you go too red, your broker they'll liquidate your account. All right. But eventually they got to cover. They got to buy back the shares that they sold to the market and give them back to their broker. So what happens, what kept happening is that people were getting squeezed out. They were losing money, until they had to cover their position. So they bought back more shares. All right. So all those people that were sellers at first, buying back more shares, drives the price even higher because there's more buying. All right. So you have more buying going on, and all that buying does is increases the price. The increasing of the price makes more short sellers buy back. So what happened was you had Tesla going up. You had short people going short, getting squeezed out. And so that's like why you had this erratic and like really, really bullish move on Tesla. And they're like dominating the EV market right now. But you had this bullish move on Tesla because people were getting squeezed out short positions. But I won't stay on that long. You have entry and exit. You need to know before you buy stock doing what I do. You need to know your entry. Like before I buy stock, the price at which I anticipate the purchase of stock is in my mind. I already know what price I'm going to buy at. All right. I already know when I get into a stock where I'm getting out. And this is where I'm either if I go red or go green. All right. So if I'm getting into a stock, all right, let's just say I'm going to use some terminology that may not make sense. If I'm going into a stock and I'm planning on it to bounce off a VWAP, all right, volume weighted average price, VWAP. All right, my stop is 10 cents below the VWAP. If it drops 10 cents below the VWAP, all right, I'm out. It doesn't matter how many shares. If I bought 5,000 shares and it goes from $1 to 90 cents, I'm out. I lost $500. I'm done. I'm usually done for the day after that. But I'm just not going to, that's my exit. All right. Going up, I'm looking for 20 cents because I'm looking for a 2-to-1 return ratio. All right. So you need to know your entries. You need to know your exits. And that's what people mean when they're talking about this. Resistance. All right. This is a price or zone at which price action cannot seem to rise above. And support is a price or zone which price action doesn't seem to fall below. And then you have a trend line. Now I'm going to go off course and I'm going to show you what these two look like. All right. You have a trend. The trend is just I'm gonna look at a little bit of this and we'll get off topic. We'll break this real quick. All right, so you have a trend is trending up. That means it's going up. The price is going up over a longer period of time or over a period of time. Trending down is going down. Capping is whenever if bingo, which is a stock, if it closes at market. Or it closes the day at $5, but you wake up in the morning and it's at $20, right? And there's no trading between the two. That's a gap up. Something can also gap down. Rejected and bouncing. Rejected is talking about when a price approaches resistance. So imagine resistance is like a ceiling in your house, all right? All right. So air cannot escape the ceiling of your house, right? Because there's resistance. There's a wall there, all right? And support is what you're standing on. It's the floor. All right. You don't go through the ground because there's the ground. All right. You have support. All right. A price can get rejected, and we'll talk about what that looks like at resistance. But it's only at resistance that you talk about a price getting rejected. The opposite is at bouncing. So again, in my example, I say if it bounces off of VWAP, all right, if a stock is coming down, hits VWAP and bounces back up, all right, that's called bounce. All right, and breakout is whenever price approaches resistance or approaches resistance or approaches support and goes through it. All right, a breakthrough, support, or resistance. That's all it's talking about. All right, when it holds, is just or some people say hold, some people say respect. It's just where we use. If the support holds up, like if it goes to support level and it doesn't break through it, but comes back up. If it goes up to resistance, doesn't break through it, comes back down, it holds that support or resistance. And sometimes we say it respected the view app or it respected the 200 moving average. All right. You have higher highs, you have higher low, or sorry, lower lows. All right. This is getting more into chart patterns. All right. Which is what we're going to get into a second, because you need to be able to read a candlestick chart in order to know what you're looking at. All right. Higher highs just means I'm going to show you higher highs on the chart. It just means a chart where the peaks are continually higher and lower lows is the valleys continually go lower between the peaks. All right. If you want this PowerPoint, I'll send it to you. I don't mind. But let's get into some charts. All right. All right. Moving from accounts to charts. All right. So if everybody's seen a chart, line chart. This is a line chart. All right. This gives you information on the movement of whatever criteria it is. All right, this is a stock. Time of day is right here, and then this is price. This is a XY axis simple chart. All right, but this gives you the average price. Right, I mean this is the average of the price in the. This looks like it's broken up like a minute chart, but it has 2-hour designations between it. All right. This over here is an old-fashioned. I just realized it's an old-fashioned candlestick chart. All right. This is what anybody who's day trading is using. Right? You cannot day trade looking at a chart like this because it does not give you enough information. You have to have a candlestick chart. If you notice, this also has the volume. The volume, which I should have put over there, the volume is how many trades occurred or how many times that a stock changed hands. So that's the volume right there on that red candles right here is 51,533. That means there were 51,533 executions or exchanges of this stock in that length of time. All right. All right. So looking at individual candlestick charts or candlesticks. All right. So a candlestick can be, or let me say this. All right. So you have candlestick charts. A candlestick chart can be a 1-minute chart. It can be a 10-second chart. It can be a 5-minute chart, 15-minute, 10-minute. It can be any almost time designation that you want it to be. All right. These candles represent whatever that is. So if you have a 1-minute chart, this candle will represent what happened in terms of price action in that 1 minute. If it was a 5-minute chart, all right, I'll show you a 5-minute chart here in a second. It will tell you what happened with price action. Oops, I'm sorry. Hold on. All right. It'll tell you what happened within that 5 minutes. All right. So a green candle. All right. This is the open. All right. It means the stock. All right. If this was $1, it opened here. All right. It went up all the way up. And this is the high. Well, let's talk about the structure. All right. This is the body. All right. And then this is the wick. This is called a wick. All right. That's why it's called candlestick pattern or candlestick charts. All right. These are just extremes. These right here represent the open. So on a 1-minute chart, if it's well, let's not do. If it's 9:31 a.m., right? 9:31 a.m. My mouse is dying. 9:31 a.m. The price begins right here. It may have gone straight down, all right, and then going straight up. But at 9:31 and 59 seconds, the price ended right here. If you can see my mouse. If you can't see my mouse, let me know. All right. So again, the price opened here. All right. At the beginning of the candle, it opened here. At some point in time, it may have gone straight up and going straight back down. All right. And then got right here. And then at the last second, it got to right here. But this is the open and close of that time interval. All right. This is critical to know when reading candlestick chart patterns, because the previous candle may tell me something about whether I should buy or sell. All right. And that's why I said a regular line chart does not give you enough information, because all it does is tell you the average price during that time interval. This tells me where on that minute, or well, literally on that minute for however long time period of time, where the price opened, how low it got, how low the price went, how high the price went, and where the price closed. So I can tell if it was a bullish. We'll get into some. I'll get into some candlestick pattern lingo here in a second. All right, the red is basically the same. High, low, different though. Open right here. This is where it opened, and it was bearish. It's a bearish red candle, so it closed down here. All right, the only difference is the open and close are different. All right, it opens here, closes up top. All right, this one means it opens down here and it closes lower. And that's why it's a red candle, because it closed lower than the opening price. All right. It could have did this right here. It could have opened at $1, got all the way to 75 cents. Right. Went all the way to $1.25. And then at the last second, it could have flushed back right here. Right. And closed right there. So it could have been a green candle right until the end, and then it closed right there. All right. All right, this is actually taken from this is a snapshot, and we're gonna talk about a little bit like this, and then we're gonna get into Thinkorswim for a second. This is taken from Thinkorswim. This is from Bingo. This is don't mind this. This is a moving average. Don't mind this. This is another moving average. You won't normally have. Oh, you will if you set it up, but you won't normally have this on your default screen. All right, so this is a sequence of candles on a 1 minute chart. All right, each one of these candles represent 1 minute. This is 1405 down here. All right, so 205. 205, the price opened here. It went all the way down here, went all the way up, but it closed right there. All right, it closed right there, red candle. All right, right next to it, boom, it opened here. It got pushed down, but it got back up and it closed here. So that's why it was a green candle. All right. All right. So one thing that you're gonna do whenever you read charts is you're not gonna just read this isolated. You're gonna look at this and you're gonna look at the volume. All right. So all right, boom, red candle, green candle, green candle. You may think green candle, 2 green candles in a row. The next one's gonna be green. You would have been wrong. All right. This green candle, that much volume. This green candle, even though that candle signifies that the price, it went up, came back down, but the bulls came in, the people buying long came in to push the price back up. All right. But it was on very low volume. All right. So we get to the next one. It opens up here, opens right where it closed. Right. It could have went straight up. Right. And then let's talk about rejection. I know you can't see this, but this is a 200 moving average. Oh, I'm sorry. This is red. So this is my 14 EMA. All right. So without getting into too much lingo about what 14 EMA is, just realize that it represents, for right now, because everything's trading, the price action is below it. All right. It represents resistance. All right. So I should have snipped it better, but the price gets up to it and rejects. And by rejects means it cannot, the price got right there. It's like, oh, I can't get over. All right. So it gets pushed down, comes back up, and closes red. All right. This one right here, though, doesn't even approach. It doesn't even approach the red. All right. Bullish candle. All right. Increasing red volume. All right. If I'm shorting, all right, I think it's going to drop. I may come in right here. I don't know. I look at more chart right here, but I'm coming in at 825. I'm shorting at 825. All right. 825, it drops, increasing red volume. So all right, keeps going down. Opens here, goes down, closes here, red candle. Same thing. Opens here, goes up a little bit, comes back down, red candle. All right, I'm still holding my position. I'm not scaling out. I'm not scaling in. 825, I'm in. All right, 810, open here. It goes all the way down at 805. That's probably a good place to cover. All right, comes back up here. By cover, when you say cover, is a term you use whenever you talk about going short. You talk about covering your position by buying back the shares. All right. But anyway, it goes back up here, but still a red candle because it opened here, closes there. Even though it got down here, and even though it got down. All right, boom. First green candle to close. I'm selling my position. First green candle from 825. All right, I shorted off 825. I'm probably selling somewhere around here because it's the first green candle to close. I may watch this. This is called a Doji. We'll talk about Doji in a second. I'm probably closing somewhere around here. 15 cents in profit, depending on how many shares, 1,000 shares, $150. And let's see, I open my position right here. So 1, 2, 3, 4 minutes, $150. 2,000 shares, 300, 3,000 shares, 450, so on and so forth. And then you can do the math on how much that is. How much that is a year. But anyway, so green candle because it opened here, closes here. And then it gets right here. This is called a Doji. And actually all these, well, some of these have like names, like that's almost called a hammer. I'm sorry, falling star. Thanks, baby. I'm just waiting. I paused to see when the light's gonna come on and the thing. My wife just came in and turned on the light. All right. So I'm just waiting to see what's gonna look like. Boom. All right. So what is this called? It's not shooting star. Yeah, I can't remember, but this is almost is it inverse hammer? I can't remember the name of the thing right now. Truth be told, I don't remember almost all of them. Just because I know the patterns and I know what to look for. This is almost a hammer indicating that price is going to go back up depending on where it is in the sequence of candles. But anyway, this is called a doji. This means the price basically opened where it closed. It means it just shows indecisiveness in the market, right? So like you see doji doesn't mean you don't do anything. All right, you wait because you don't know the bulls. The bulls didn't win, the bears didn't win. The price kind of stayed where it was. All right, so this is how you read a chart. All right. If you cannot do this, you cannot actively day trade. You can buy stuff on Robinhood. You can buy stuff on Webull. You can do stuff like that. You can do options trading because options doesn't require you really to read candlesticks. It just requires that you look at news and maybe get some stuff right. But in order to day trade, you need to be able to look at candlestick patterns. Now, there's some other tools that I use, standard deviation channels to know some other stuff. So I don't rely solely on candlestick patterns to make trades. They just kind of confirm what's going on. And that's all I really wanted to get into today. I may show a little bit of trading if anybody's still on. If anybody has any questions, I haven't seen any questions in the chat, so I'm not going to answer any questions today. Hopefully this thing will show you what it looks like. I'll talk about support resistance because I said I was going to talk about that. So let's get into Thinkorswim. Thinkorswim. All right. So Thinkorswim. This is my, oh, it's working too. Good. All right. This is my dummy account. Maybe I can show you what a trade looks like. All right. All right. Boom. All right. So hold on. Get in there. Get in there. All right. I'm not trying to flex. This is a, if you see this right here, it says on demand. This is, actually, I don't know why I didn't say this. If you're going to start trading, you need to trade in a paper account first, which is basically trading with fake money. And this platform I'm looking at right now is Thinkorswim with TD Ameritrade. They have two ways you can do it. It's on demand. It allows you to go back in the past and trade past days. And then they have paper trading, which allows you just to trade during this normal trading day. Live. It's a 30-minute delay, but allows you to trade live with fake money. All right. You need to do this until you can prove that you're profitable in the market. If you do not do this, all right, you're going to lose money in the market. I guarantee it. All right. And it's just a reality of day trading. It's just as much as I hate to think about possibly having a red day or so on and so forth. It happens. All right. Actually, last week I didn't have a red day at all. I had 0 red days. I had 1 red trade that should have been green, but I had a bad feel. And it was only for like $30 because I was getting out of the last bit of my position. So last week was really good. All right, so these lines right here, and these lines right here I drew these. Like you have the option in here to come in and make a line. All right, right there, boom. All right, so I made that line. All right, this is a 1 minute chart. I trade on a 1 minute chart and a 5 minute chart. All right. If you look at it, why did it stop moving though? Why did it just stop all of a sudden? Yeah, I don't know. I don't know why it stopped all of a sudden. I'm kind of upset by that. Let me see if I can make it go back. Hold on. See if I can make it go to 930. It may not. It wasn't. It was. It was acting up earlier, which is why I was surprised it was working. All right, it's not. It's not going back. Boo Radley. All right, so let's talk about support and resistance. All right, so I cleared this chart before because I've traded this stock several days. If you don't know about it, it went from like a penny stock being like $1 or something like that, 50 cent. At 8.33, it got up to $9 this day. I call it a nice move on it. All right, so support and resistance. All right, so this is a line I drew probably off of this day. All right, the stock trades, dips below. This is VWAP. This is just what it does is it takes into consideration all the volume. Again, this is extra stuff. It takes into consideration all the volume because I'm gonna end this chat this real soon. All the volume and the average price, and it weighs those against each other, and it gives you this line, right? Most day traders know about this. Yours doesn't have to be blue. You can put it on the chart, and this is what I mean by Robinhood. It doesn't have this. Like you probably can't map out VWAP. You probably can't do I'm sorry, I was reading my text. A 9 EMA. All right, this just the EMA right here just takes into consideration the candlestick movement. And it's 9 because it takes in the average of the last 9 candlesticks, the price action of the last 9 candlesticks. All right, and what these do is these provide they're like guidance, right, on price action, and their levels of support if they're trading above, and their levels of resistance if it's trading below. All right, my last one right here is 9 EMA. All right, the 200 EMA. This takes into consideration all of the previous 200 candles, right, and averages them out. All right, let me see if I have if you notice, and this is going to look a little different, and it's going to be perfect because it's already. Hold on, let me make this big so you can actually see what's going on. All right, this blue line is gonna follow perfectly because it's the end of the day, so it's already taking in all the day's information and plotted this out. During the day, it's not perfect on this. All right, so let's talk about support real quick. All right, so I'm reading this chart. I'm looking at it. All right, goes red. All right, first trading day goes red, goes red, goes red. First candle to break VWAP. All right, this was until this point. This is pre-market. This shadow right here is pre-market. It's trading around VWAP. All right, it breaks below VWAP. All right, breaks below resistance. All right, stay below resistance, trading below resistance, trading hits above resistance. You do not buy this candle, okay? Because it may reject and come back down and just trade it. But it did close above it, all right? So on this, first candle to make a new high. Let's see if I have to go back. All right, so this is, again, when I say I consider other sources. Let me not do it like that. This is my 5 minute, and I go back and forth between the 5 minute candle and 5 minute chart and 1 minute chart. All right. I don't know why I didn't just do this. All right. First 5 minute candle to make a new high. Boom. We have it right here. First 5 minute candle to make a new high. All right. So I don't trade this one. I don't trade this one. This one is on the first 5 minute candle to make a new high. All right. I look down here. I take a starter right here. So my starter is right here. It may be lower, depending on, I'm just saying. It may be right here. What's the low of this candle? Right there. That's where I'm getting out. All right. Oh, I'm sorry. Make that smaller again. All right. See that? This is when earlier I was gonna say I had a stop. All right. All right. I get in at 575. If the price goes to 570, I'm out. I lose 5 cents. I'm done. All right. Price goes up. 580, 590. All right. Red candle. This is a pullback. It's considered a pullback because when prices move like this, right, eventually the price has to correct. Pulls back, all right, but it doesn't come near where I entered, and it doesn't come anywhere near where I borrowed a whole position. All right. Green candle, I'm still holding. Now, maybe if that was a red, all right, I may have gotten out of my position, taking my profit, up, up. I'm sorry, before I got into this, I should have told you. 570 is my stop, 5 cents. I'm looking to get in 10 cents. 575, 585, I may take a half. It goes up, 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 right? This line is drawn for, I wouldn't have drawn this line yet because it doesn't make any sense to draw this line. It goes up, and this topping tail right here lets me know is about to change a little bit, all right? Topping tail, the price went from here all the way up, but bears came in and sold it all the way back. So the price went all the way up here, but got rejected. All right. And then this shows indecisiveness in the market, and it's on a large volume. Large volume topping tail shows that there may be a reverse. All right. Large volume on a green doji almost. And then, but volume's lower on this red candle. Volume's lower on the red candle. So this may be considered a pullback. All right. But I'm out here. Like somewhere around here, I'm out. Once I see this topping tail doji, I'm out. Red candle begin to form, I'm out. All right. Just because you're out doesn't mean you can't get back in. This is what I mean about Pdt rule, right? If I'm in this trade, I made, let's just say I bought it from here and I held the whole thing and I sold around here, right? 575 to 6, let's say I got 615. All right. That's 35 cents, 45 cents. Maybe, I hope so. All right. 45 cents a share. That's good. Super good. 1,000 shares, $450. It's almost like $100,000 a year, somewhere around there, $90,000 a year. If you can do that every day. All right, that's good. With the Pdt rule, though, I cannot, like, I'm not going to take a bunch of these trades. Right, but I can't take a bunch of these trades because I'm going to run out of days. Right, but you're going to have to look for moves like this where you get 45 cents out of every trade or a whole dollar. You have to look. You have to have that. Like you couldn't get in down here at 575 and then sell right here 590. Right, what are you going to do with 15? I mean, 15 cents good. It's $150 out of 1,000 shares, but it took you 5,000. Almost $6,000 to get into it. You made $150. Your account's going to take forever to get to 25K, right? It's good you made $150, but what are you doing? Oh yeah, I'm gonna post this so you can go jump through it. So this is why the PDT is important. All right, you get out of the trade for the pullback. All right, where am I getting in? I'm getting in first candle to make a new high above my red. So I'm getting in right here on this candle, 622. All right, I'm riding it up, 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 up. First candle, again, almost not a top and tail, but I see some rejection because it opened here, it dipped, went up, or it went up and dipped, whichever way, but it closed here, all right? And then this lets me know it's almost going to be a reversal, all right? And it does, it reverses, comes back. I take whatever my profit is out. All right, and it dips back up below. And this is why I have this line drawn at 612. If you remember, I had this line drawn earlier. Let me delete this. What did we just draw? All right, this is now a support line. All right, because here's what happened. It got up here, went up, 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 down. All right, up, down, up, down, but it did not break this line. All right, all the way back up and back down. And then it didn't double bottom, but you almost say double bottom. All right, almost near the same line. So this now creates support. So anytime the price gets here, I'm almost certain, depending on what's going on, I'm almost certain that the price is going to I can't say almost certain. Let me just say it serves as a level of support for the price movement. All right, price goes back up. All right, these are higher highs. All right, and lower lows. So this means it's trending up. This is why I was talking about higher highs. All right, so look, high, dip, high, dip. All right, high, dip. All right, and high all the way up here, double top. Now that's why I probably drew a line because it's double top right here, and then low. All right, these are just peaks. All right, let me bring this down so it makes more sense. All right, price goes high, and this red candle dips. All right, it goes back high again, it dips, goes back high, and it dips. All right, but this time, it if you notice before, it never dips as low as the previous dip. So higher high, right? First low, high, low, nowhere above the previous low, high. This was at the low, the same previous low. All right, so maybe market's cooling off for bull. All right, still higher highs, lower low, or higher low, right? All right, maybe not. Maybe the market's not cooling off. All right, last one. And then I'm about to get off. Lower high. All right, this right here lets me know. Lower high, it means it's not as bullish as it used to be. You know, high, low, high, low, high, low. Same low as before, off support. High, double top, 674. Low. High can't get as high as the previous high. It shows me maybe we're going a different direction. All right, gets low. Lower than the previous low. That's a sign that we're trending down. All right, high, lower than the previous high. These are lower lows. Lower highs and lower lows indicate the market's going a different way. It's going down. Higher highs and higher lows indicate it's going up. All right, so down. All right, and it touches view app. It dips below view app, but it still holds my 612. And this is what I meant earlier, right? So let's just say I didn't see this coming. 612, I know is support. I buy right here. All right, so I see the price coming towards 612. I take a starter right here at 612. I get a little bit of a move to about, what is this? The high on this candle is 624, 12 cents. Maybe a quick 500 shares, 1,000 shares. I don't know what your starter, maybe 5,000 shares. 5,000 shares, in, out, 2 minutes. You're in here, 612. All right. The low of this candle was 611. You get in at 612. All right. 2,000 shares. You're back out. You don't catch the whole move at 624. You're just looking for 10 cents. 612 to 622. You're out 10 cents. 5,000 shares is $500 you just made right there in 1 minute. All right. Back low. It comes down again. It respects it. Now it's trading in view app. Trading above. It goes above view app. This is called consolidation. When it's just like up, down, but real tight, it's consolidating. You can trade the range. Like you can trade these little pops because it's respecting view app. Like up, down, around view app, up, down, around view app, up, down, around view app. You can trade in here, but you're gonna have to be quick. You're gonna have to be in and out. Your stop's gonna have to be really tight. All right, up. All right, lower lows. I mean higher lows. Higher low, higher low, higher low. All right. Approaches what is this line draw right here? Oh, approaches what you call it. All right, boom. All right, it breaks out. This is a breakout. Because it goes to previous, remember? All right. Show you why this is breakout. Make this smaller. All right. Remember this was 674. It double top right here. Cannot break it. All right. It peters around. All right. Nice little trend right here. I'll draw a trend line. Nice little trend right there. It goes through 674. It's bullish. Goes all the way up to 711. All right, 674, 711, you capture that profit. All right, this is a little bit about day trading. This is not nearly everything you need to know about day trading. It's a little introduction to the price movement. You consider the volume along with the price movement. You also consider something over here. This is a level 2 ladder. It doesn't It's not an adequate level. I mean, you can trade off of this level 2. This is time and sales. I go all this other stuff in a different video, but this is some stuff you need to know if you're going to actively day trade and do what it is I do. So for all the people who had questions about what I do or had questions about the market, if you have any other questions, and you post them in the comments after you see the video, I will try to come back and answer them. Thank you for joining. You don't have to like or subscribe, or if you do, you can. I'm not trying to do this to make money. I'm trying to do this to inform people and let the people I know who are closest to me, who know me, let them know how to make money, or I mean, possibly make money, or at least know what they're looking at in the market. All right, let me see if it's trading. Boom, it's trading. All right, so let me show you what it would look like. I'll give you a little demonstration. It's actively trading. All right, I don't normally trade the first move in the market, but this is how you enter orders on this only on this one. Only on Thinkorswim can you enter orders on the price ladder. All right. So I don't have any lines drawn, but let's draw a line real quick. I see a lot of price movement right there. So it looks like it rejected, right? Right. So I'm not bullish. I'm not red. I'm just watching. It's the first minute, so it's a large candle though. We're at 2 million shares being traded. All right, but it's not breaking 72. I'm gonna buy the break of 72 though, depending on what it does. Now I can't remember what it did. I think I do remember what it did this day. All right, it's becoming a big red candle. All right. All right, we're seeing what it's doing. It's broken. It's already broken through the 200 MA and the view app. If it breaks through here, then I'm bearish on it. All right. All right. If you see the price action, it dipped all the way down here. All right, it's going. If it goes green, and then we get another green candle to close above here, I may be bullish on it. All right, now I'm not using all my levels of analysis on this. One, I'm not taking any real losses. All right, I said 72 was my entry. I missed it. I'm gonna have to wait for a pullback. I wouldn't buy this. I don't chase. It's a nice move. Maybe through 93. For some reason, I have 93 drawn. I buy, but I'm waiting on a pullback. I'm waiting for the price to pull back so I can buy. I'm not gonna buy the top. And I missed out. I'm okay with missing. Pullback's gonna happen right here. All right, I'm buying the break of 8 if it happens. So I'm already right here. I already put an order in to buy 8, the break of 8 if it happens. It filled. All right. There's 180. There's 807, 808. All right. 814, 815, 817. I'm approaching my next line. I'm out. All right, $390. All right. Now, normally I wouldn't do the whole thing out. All right, 825. Because on this, I cannot do hotkeys. I can't buy and sell half. All right, I can scroll down like this. Like, okay, let me just enter a position just for the sake of it. All right, I'm probably gonna lose money. So I can join the bid. We'll talk about bid and ask in a second. So I'll join the bid. Boom. All right, it filled me at 810. All right, I'm filled at 810. I can scroll down right here, or I can hit 1K, and it'll sell my 1,000 shares. All right, at 810, I'm not selling my 1,000 shares. All right, I'm gonna try to get 815. Try to sell 1,000. Boom, got filled at 815. Price moved up. All right, let's try to get. Where's my line right here? Let's actually try to trade this thing. And this is what I mean. You have to be quick. Like, I don't have time to do all this and have to enter in stuff while I'm trading. All right. I don't trade my P&L. I'm not looking at my profit and loss. All right. I'm looking at price movement. I'm looking at my entries 810. I'm looking at my exit. The back of my exit is at 820. All right. Another 1,000 at 820. I'm selling. I'm getting out. All right. All right. This is a sign of weakness. Yeah, I got filled, but I may have to come out. I may come down to 115, 815. All right, now it's going. All right, I'm 1,000 long, 1,000 shares long still. Click my 1,000. It's topping. If you notice, it got up here. It got up here and got pushed down. It got up here, and got pushed down. All right. I think it's gonna reverse. Again, I don't know. 3 strong candles. Maybe not. Maybe this is just a pullback. Is it below my entry? All right. My profit and loss on my remaining position is on minus $20. All right. 810. I hold through this pullback because I think it is a pullback. All right. I can sell the bid, and selling the bid would get me out, but I don't. This is a big red candle, but it may doji as a big red candle. It freeze on me. It froze on me. Oh, boo. I'm sorry. This right here, if you look, this is the time, 9:35:00. All right, but that is how quick it goes. All right, so 9:31, 2, 3, 4, 5. 5 minutes, $565.20. All right, and if you add the $15, then I made a little bit more money. All right, nice early morning and great. I mean, that's a great shot on bingo. That would be a good morning. But just as easily as you can be up $500, $600 in 1, 2, 3, 5 minutes, you can be down $1,500 in 5 minutes. Don't just let. I mean, unfortunately, I got what I knew right on here, but it could have easily got right here and flushed on me. I was just fortunate. No. Again, questions in the thing. I'm gonna end it right here. And then I'll do some other stuff. Here. Oh, let's see how much money I made or added to my thing. Oh, let me let you know about this. So, like, if you look at my account over here, I started with, I think it starts with $100,000. I wasn't comfortable trading until I made 53K in here. I was like, it may be more than that. 43K. It may be. I think I've made some trades since. I was like 50 something K. It was but I made some trades since and trying some stuff out and doing some stuff and playing around with it where I've lost like big positions. So I think it may have been more than that. I showed my mom what I was doing on here, so I made a little more. A little more than what's right there. All right, beautiful people. I'm gonna save this. If you want to come look at it, you can skip through it. Love you guys. And let me get out of here. All right.